Alrighty, PC team. So in this video, we are going to go over how to predict breakouts utilizing the level 2. Why this is so important, why this has greatly increased my win percentage, and why I know when to hold or when to run. Again, you could use it in either direction. Now, I have my trusty whiteboard here, and what we're going to do is basically I'm just going to draw it out and show you guys what it looks like and show you guys a live example. Now, I had a level 2 to the left side of me. And if we get an example live, that's even better. I do have a pre-recorded example. However, if we have an example live, that would be, like I said, even better. Now, okay, we have the level 2. Okay. Now, what we have here is we have orders like this. Now, what you're going to see is there's a few things. One, there are makers. How can I? Hold on. Give us a little more room here. Two. There are makers and takers of liquidity. What I mean by that is if you put your orders to sell on the ask and your orders to buy on the bid, so orders to sell on the ask, orders to buy on the bid, you are providing liquidity because you can see your order on level 2. If you're someone like me who is a taker, I'm always buying on the bid and selling on the ask. I'm pulling liquidity off of order books. I am charged with higher commission rates. You're actually you're rebated if you're a maker. If you're a taker like me, you're charged higher commission rates. But you also don't see their orders on level 2 because they're taking that liquidity away from you. However, you can still predict breakouts from the makers. Okay. Now, what you're going to see is we're going to do the sell side first and then the buy side. Say in this example, if I scroll down on my level 2 here, you can see, the order's gone now. Okay, this block order at 158. Okay, 100,000 shares, $160,000 of selling pressure. Say we get to that level. So the next order to be filled is 101,715. Okay, and the buy side is, I don't know, 2,000. So there's a clear imbalance on the level 2, right? Clear as day. What you're going to see is this order is going to, out of nowhere, start getting filled rapidly. There's a difference between, okay, this is 101, then, 99, and then 95, and then 92. That's not rapidly getting filled. You're not going to get a breakout that way. If you see a monstrous imbalance in level 2, and you see an order go from hypothetically 101k to like 70k, and then 40k, and then boom, next thing you know, it's not even a big block order anymore. At that level, at that point, you should be buying because what's going to happen is it's going to break right through that resistance line. Okay. It's going to fill that order, and it's going to, like, the floodgates will be open, and buying pressure will carry this to next levels. Okay, now let's look at a live example. Once I pull one up here, so you guys can see what it looks like. Oh, it taps 6, and look how quickly it's filled. Okay, so it's 11,000, 10,000. 9,000 and 3,000, boom, and then breaks. You do not have much time. Okay, so the second I saw half of that order be filled, or more than half, like 75%, I knew that there was high odds of a breakout. We see the big level 2, or we see the big sell order, and then it's filled. Let me see if I can turn this up a little bit. So boom, instantly 625. Okay, you see that? It's stalled down at 6 with a big sell wall. You often find these sellers at psychological levels, right? So they're making liquidity. The second it broke, you see this thing slingshot up to 625. Okay, that is an example of predicting a breakout on the level 2. Now you're going to look at an example of what it looks like to the downside. I captured it this morning. I was short on ACON earlier today on this rejection of the 9 EMA. We don't need to go into Elliott wave theory, blah, blah. I was short, okay? What I also saw were these big buy orders at 120. We saw over $100,000 or just under $100,000 of buying pressure right at that level with literally not much sell pressure. So let's see what happens when it gets to that level. Testing 120. I was jamming. Let me make this. So you guys see that big buy order? And then, okay, ready? So it already went down a little bit. Then it went down just like that from 60,000 to 16,000 to 14, 13, 600, just like that. That order, that maker was getting filled or from takers. People were selling their shares on the bid to that person. Okay, as I was sizing up the short button right here. I'm like, here we go, it's gonna break. So I doubled up my short position and boom, right there, automatically 7 pennies a share. This ended up going down to 1, but I ended up locking in most of my profit there off the initial burst of momentum to the downside. Like right there, I'm usually already locking in a decent amount of profit because as it breaks that bubble, sometimes you can get a bounce. So I like to lock in profits right as it kind of breaks through that resistance because there's no clear resistance after that. So it just continues to trickle down, and I made about 10 pennies a share on that, which doesn't sound like a lot, but on a $1 stock, it's almost 10%. And how much did I make on this one? Was just about $1,200. So 10,000 shares short, maybe about 12 cents a share. And that's how I utilize level 2 to the downside. Again, it works in both directions. Utilize level 2, predicting stock breakouts to the upside and the downside, cracking that support or that resistance when those takers are taking those shares off the table. Nice trade. Wasn't a monstrous winner, but it was still a nice base hit that met my daily goal. Alrighty, back to the video. Okay, and you see a big buy order approaching. Say it's just 50K, and there's like 300 right here, and then there's 5K right here. There's 1,000, 1,200, 2K down there. So we see this on the level 2. Clearly, this is a big order, right? Say this is 101. This is 1. This is 99. Okay. What we know about utilizing it for stopping out quick enough is if in the reverse order, this 50,000 share order goes, okay, it moves up. This order is filled, so now this one's next up to bat. This buy order, and the buy order is 50K, and then it's like 40K, and like, oh, it's bound, it's going to bounce here, and the next thing you know, it goes like 15K, and a majority of those orders were eaten up. Someone's trying to take that order off the order book, and what's going to happen is if that order's filled and it doesn't hold, then stock does that. Okay, blows right through it. Now, you can get in the realm of algo flushes where algorithms purposely fill these orders to have traders buy it and then they reverse the stock and then you're wondering what the heck. However, knowing how to predict breakouts will make you more money than how much an algo flush would lose you, if that makes sense. If you guys don't know what an algo flush is, basically it's in the exact thing. And there's an algorithm that sees that big order and it forces a market maker will force the order to be filled just so buyers will step in and they'll come in and hit the short button and force the stock to do this. Like, so it fills that sell order. See the sell order's right here. Fills it. Everyone's like, oh, breakout time, buy order, and then right down. That's rare. I wouldn't expect that. I wouldn't be timid with that. I would strictly utilize this for upward momentum. Now, a few other things to note are there's just two more real things. Okay, you have to wait to predict the breakout or to add into the breakout. So if this is 100K and this goes 90, 85, 80, 79, back up to 82 because more sellers stacked up. it can bounce. This is still a big order by nature. Just because it's a big order doesn't mean it's going to get filled and there's going to be a breakout. What I'm telling you is stocks can, hypothetically say if this was a sell order, okay, stocks are testing it. Stocks don't always have to break big sell orders and have a massive breakout. They can oftentimes just get rejected, and that sell order can still be there. We just saw that in WLDS. So don't think, oh, big order coming, here we go, size up. You have to wait for this order to be at least 75 to 80% filled before you're sizing up. You're adding into the break. Okay. And then the last thing, there is a rare instance where it's the perfect amount of imbalance to where, okay, there's 100K right here, and then it finally gets filled. Say it's 100K, and then it's finally filled. Next thing you know, it goes, 15K, and then zero because it broke. But the price per share is barely jumping. So say in this example, we'll do the numbers that ENVB had or BMR had, $6. Okay, and instead of going right to 625, it went to like 601, and then 602, and then like back down to 6. What you're gonna see here, or back down to 599 even, is that sell order was just enough to kind of wear out the buyers, because what the buyers are trying to do, is they're trying to break that wall. Okay, there's a big wall, and those buyers are trying to break through that wall. But if there's enough resistance at that level to a point where the buyers are exhausted, so they're constantly battling like this, right? And it breaks, but the buyers are just like, all right, we're done here. We broke through that wall. We're tired out. Then you have a 50-50 shot. Because now the big sell order is gone. However, it's not breaking out like you should. So really, it's kind of a cat's game at that point. Yes, it can retest 6 and continue higher, but if you see the stock stalling out after breaking out and not going like straight up, hitting next price targets, and a flourish of buying pressure, what that sell order did was it really just exhausted buyers, and the buyers officially broke that sell order, but there's not enough buying pressure afterwards to continue it higher, which is rare, but it does happen.